Hi and Assalamualaikum. So, today we will present the definition and method on computation of Zakat on will. Our group members is Hazimah binti Ibrahim, Nik Najah binti Nik Yatim, Nur Natasha Alia Kaiza binti Abdullah, and Nur Husna Madiha binti Masri. So, before we start, let's watch this video first.
Anwar is a well-known entrepreneur. He has tons of wealth. He has a chicken and cow farm, a paddy field, investment and gold, as well as businesses such as a boutique, hotel, and a cafe. Anwar has always traveled around the world. My life is perfect. Unfortunately, not everyone is lucky as Anwar. Meanwhile, Anwar is lost in his deep thoughts. Paying zakat helps the needy to afford basic necessities.
No starving, we are free!
Now, it's time for you to make a change.
We know that zakat types are zakat fitrah and zakat on will, which is zakat fitrah is a flat fee or levy imposed on each person, and zakat on will is a religious levy on wealth. Zakat on will or al-mal income refers to earning from salary, dividends, or other receivables income from service or consultation. Salary include annual, deferred, allowance, commission, bonus, and consultation. Depends on the amount of will that you have and how you had it for. Your will has to reach its nisab, the minimum amount upon which zakat is payable, and reach its how 1 lunar year. Zakat al-mal or zakat from earning is levied only on Muslim whose wealth exceed a threshold called nisab, Gulf 2005. Zakat rate. The minimum threshold nisab of zakat on saving or investment is 85 gram of gold or worth. The rate of zakat is 2.5% as a livestock. Both the minimum threshold, the rate depend on the type and the number of animal. Types of zakat on weight are zakat on business income, zakat on employment income, zakat on saving, zakat on shares, zakat on gold, zakat on EPF, zakat on crops, zakat on livestock.
The Accounting and Auditing Organization of Islamic Financial Institution in its Standard on Zakat FAS 9 suggests two primary methods to determine the zakat base. First is the net asset method and the second is the net invested fund method. However, both methods produce the same result due to the equivalence of the asset and the liability side of the balance sheet. While the standard focus on Islamic financial institution, it can also be applied to other business. The net asset method focus on the left-hand side of the equation, while the net invested fund method concentrate on the right-hand side of the equation. The basic calculation is as follows. The result must be multiplied by 2.5%. This zakat rate on business is determined by National Fatwa Council. The net asset method focuses on the left-hand side of the equation, while the net invested fund method concentrates on the right-hand side of the equation. The basic calculation is as follows. The result must be multiplied by 2.5%. This zakat rate on business is determined by National Fatwa Council. Computing zakat calculation, it is important to note that before the zakat base is determined, adjustment must be made for transactions that have not been accounted for in the preparation of the financial statement. For example, if there are bad debt that have not been accounted for, then the bad debt will be debited while debtors must be credited. Similarly, if there is depreciation that needs to be increased, then depreciation should be debited with the increase and the provision for depreciation should be credited. It is only after the adjustment have been done that the zakat base is determined as in the table. First method to determine zakat base is net asset method. Second method is net invested funds method as in the table. Zakatable base A should equal to zakatable base B.
Okay, now I, Nur Natasha Alia Kaiza and Hazima Ibrahim will continue our presentation with the differences between accounting for zakat on business and accounting for tax. The first aspect is definition. The definition for accounting for zakat is compulsory charitable giving by high net worth Muslims, while the definition for accounting for tax is charge imposed by government on the annual gains of a person, corporation or other taxable unit. The next aspect is management. Accounting for zakat is managed by the Department of Zakat, Wakaf and Hajj, which is an agency under the Prime Minister's Department, while accounting for tax is managed by the Internal Revenue Board, IRB, an agency under the Ministry of Finance. The next aspect is obligation. The obligation for accounting for zakat is to the creator, while the obligation for accounting for tax is to the federal government. The next aspect is legislation. The legislation for accounting for zakat is based on Al-Quran, As-Sunnah and Ijtihad, while the legislation for accounting for tax is based on statute law, common law, IRB and LHDN guidelines. The next aspect is law. The law for accounting for zakat is zakat law, relatively difficult to be amended since it is based on revealed doctrines, while the law for accounting for tax is tax law, relatively easier to be amended since it has no direct relationship with revealed doctrines. The next aspect is distribution. The distribution for accounting for zakat is distributed to poor people, to free captive, to those who are in debt, to those employed to collect fund for Allah cause and for welfare. The distribution for accounting for tax is distributed for government expenditure and development. The next aspect is claims. The claims for accounting for zakat is if zakat paid is more than the tax payable, the balance cannot be claimed from IRB, while the claims for accounting for tax is if tax payable is more than the zakat paid, the balance must be paid to IRB. The next aspect is information. The information for accounting for zakat is gained from balance sheet, while the information for accounting for tax is gained from income statement. The next aspect is payable. Accounting for zakat is payable on accumulated earnings of the business, while accounting for tax is payable on current earnings of the business. The next aspect is exemption. The exemption for accounting for zakat is based on nisab, which is any wealth below the limit is exempted from zakat, while the exemption for accounting for tax is applicable when government and tax authorities specifically prescribe for the exemption.
Okay, accounting for zakat. Zakat base is the net adjusted amount of zakat, assets and liabilities used for or derived from business activities. An entity is advised to refer to the relevant zakat authorities for further guidance in determining the net adjusted amount of zakat, assets and liability. Okay, however, in accounting for tax, the tax base of an asset is the amount that will be deductible for tax purpose against any taxable economic benefit that will flow to an entity when it recovers the carrying amount of the asset. Okay, next is rate. Accounting for zakat. The rate of zakat on business as determined by National Fatwa Council is 2.5% of zakat base. Okay, that's mean for calculate the zakat rate is 2.5% from the total of zakat base. However, the percentage of tax charge increase as the amount of the persons or entities taxable income increase. Okay, next is for assessment. Zakat, accounting for zakat. Zakat shall be assessed when the entity has been in operation for at least 12 months. For the period known as haul, zakat on business shall be calculated by multiplying zakat rate with zakat base. Okay, for accounting for tax, tax payable under an assessment upon submission of a tax return in due and payable by the last day of the 7th month from the date of closing of account. Okay, for the next slide, postulated of accounting period. Okay, for accounting for zakat, every year subject to the obligation of zakat except for the agriculture product is calculated every harvest. However, in accounting for tax, cannot wait until the end of the life of the company to measure the success of the company's activity. Okay, next is material principle. Okay, for accounting for zakat, related to the measurement and fulfillment of obligation to God, society and the individual. For accounting for tax, with respect to the relative importance of information decision making. Okay, for the last is the principle of consistency. Okay, recorded and reported in manner consistent with the principle outlined by the Sharia. That is for accounting for zakat. However, in accounting for tax, recorded and reported according to the GAAP patterns. Okay, that's all for difference between accounting for zakat and accounting for tax. Okay, that's all from us. Thank you so much.